Hi, I'm Lou from Dividend Dog. Welcome to the channel. So here we talk about stocks with an emphasis on dividends paying stocks. So if that's your kind of thing, please like and consider subscribing. So today the stock we're going to talk about is General Motors, GM. Just to give an overview, I think most people are somewhat familiar with it. It's the largest of the big three manufacturers, global manufacturers based out of the United States. So in addition to GMC, they also make brands under the Chevrolet, the Buick, Cadillac, as well as owning Cruise and OnStar and GM Financial. So they've got these brands, and to go into some of the history of General Motors, what might surprise people, as a company, GM is actually not that old. It's old and it's not that old. So let me explain. For those that don't know, GM as a business went bankrupt back in 2009. So we have old GM and now we have new GM, two different companies. So just to go over this here, it's kind of an interesting history. You know, when you think of General Motors, the company that we have is not that old, but we'll talk about old GM for a minute. So old GM has this long, storied history that you can think of. So if you're interested in knowing more about old GM, a good book out there. It's written by Alfred Sloan, who was a longtime executive of old GM, wrote a book. And he was an executive back in the 1920s all the way into the 1950s. It's called My Years with General Motors. I know, catchy title. But I enjoyed reading it. You know, it talks about the golden years of General Motors. But unfortunately, back in 2009, everything came crashing down, and the investors in GM stock were basically just wiped out. So 2009, new GM is what we have here, is what was created. So they had their IPO back in 2010, and they only took on the best brands that they thought would be profitable. So they got rid of a lot of their brands, like old historic brands like Pontiac, Saturn, Saab, etc. So now we have new GM, and it's got the GMC, Chevrolet, Buick, Cadillac, and they cherry-picked the ones they thought would be the most profitable. So with that lead in, let's look at the financials of new GM. From now on, we'll just talk about new GM. That's the General Motors that we have now to look at. So when we look at the financials, GM is profitable. In fact, it's very profitable. As you can see, in 2022, it made a net profit of $9.7 billion. However, debt is substantial as well. Total debt in March 31st of 2023 stood at a whopping amount here, over $114 billion worth of debt. Also, the dividend was suspended back in March of 2020 because of the pandemic. So I see on, I pulled this from Value Line Reports. It's 38 cents for 2021, but that's actually incorrect. Or maybe they're looking at things about timings as far as when they announced and paid. I don't know, but in 2021, they paid no dividends. So GM brought back the dividend in September of 2022. So it's important to note that GM had been paying dividends of 38 cents per quarter, but when they resumed to dividends, it's only paying 9 cents per quarter. So while I applaud the dividends coming back, it's at a much lower rate. We can look at dividends to net profit. Uh, they have some very low payout ratios. Now, usually this implies a safe dividend or room to increase. But in this case with General Motors, I wouldn't be so sure about that. Capital spending, which I'll put in here, capital spending, is also very high, like almost all of the automakers. They have high capital spending or high capex. So an example, in 2022, the earnings per share were $6.13, which is great, except when you see that the capital spending was $6.60 per share. So even while GM's cash flow can support this level of capex, every penny of their earnings and more are being spent. And this is true for a lot of years, and this is troubling to see as a potential investor. Ratings-wise, we'll go into some ratings. Value Line awards them a B+. Morningstar gives it no moat with a negative trend, but assigns it a fair value of $78 per share. The three big rating agencies, Fitch rates it back in September of 2022, a triple B minus with a positive outlook. Moody's, back in March of 2023, they actually upgraded the debt to Baa2 on the new senior unsecured credit facilities with a stable outlook. And S&P, back in January of 2023, assigned it a triple B on the foreign currency long-term credit with a stable outlook. So it has an investment grade rating from these agencies. So let's look at some of the insiders to see what insiders have, what insiders are doing. So we'll look at the insider trading first. So looking over the last couple years, the largest transactions are options being exercised and sold. There's more sales than buys, but there are a few buys. A director purchased about $300,000. That was on February 10th of 2022. That was at $50.61 per share. Paul Jacobson, he's an executive vice president and also the chief financial officer. He bought $1.3 million at $38.79. That was on April 28th of 2022. And then he bought another $1 million worth on May 19th of 2023 at $32.60. So the good thing is the chief financial officer sees something that he likes in GM shares. As far as the insider ownership of GM shares, it's not much of a surprise that the CEO owns a nice chunk, but none of the management team owns more than 1%. The three big beneficial owners show the usual big investment firms like BlackRock, Vanguard, Capital Research. So there really are no big surprises with that. So we'll go over some of the pros here of General Motors. GM, one pro is that they're investing in their technology. They're buying Cruise. They have Super Cruise and an Ultra Cruise, which will come out, as well as they have an electric vehicle, the Bolt. So like all the other automakers, they're investing in the new technology. I think in an effort to try to catch up with companies like Tesla. So and someday, these electric vehicles, I'm sure that it's going to be, it's everywhere now, but I mean, it's going to be probably omnipresent at some point in the future. That we're going to have these electric vehicles, and there'll be like driverless or self-driving cars out there. So GM is investing in these things. whether GM will be a leader in these things, I guess, remains to be seen. I think the biggest pro is the valuation. Looking at their stock, I mean, at this point, GM is cheap by many metrics, especially on the price to earnings ratio, being in the single digits. And GM is using some of their free cash flow by buying back shares. On the surface, this all sounds great, but you have to balance this against the cons, and unfortunately, there's quite a few cons, I think, with this company. So the first, if we go into the cons, the negatives here, I think the biggest issue with GM is more just the industry it operates in. You know, automaking, it's very capital intensive, it's very cyclical. If we get into a recession, profits can dry up really quick. I think we all know that during a recession, the first thing to get cut is going out and, quote, buying a new car. I would say everybody sort of knows that. Investors know that. So that's why it's no surprise that they don't want to overpay for GM shares. This is just the nature of being in this cyclical kind of industry. The second con we talked about, GM has this crazy high level of debt. And it's the good thing for right now is it can be serviced. It has this massive cash flow and big profits. But I don't think we can really count on the durability of its profits. This kind of leads me into another con that, you know, if we can't count on the profits, we can't really count on the dividends to be there either. Even with this low rate, this low payout ratio that they're paying out of the earnings, I don't see it as being a stable kind of thing that can be relied upon. You know, they have this history of, you know, it's like during the pandemic, they cut it, they bring it back after a year and a half or whatnot, but they bring it back at a lower rate. So that's not good for us dividend investors that, you know, if you want something that's a reliable payer, I don't think GM fits the bill here. I think there's a couple of things here as I researched this that we should be aware of too. The unions, I know UAW union and another union, their contracts are expiring in September, this coming September. I guess there's always a strike risk, but I think when their contracts for their workers are coming due, I think the risk of having a strike, it seems like all the automakers get into this where they're battling their workers, and you know, not to get political, I guess some people are for the workers, some people are for the company, but you know, it's just one more thing that could throw a whole monkey wrench into this whole operation. You know, we've seen, you know, there was a computer chip shortage. You know, so they were making these vehicles, and it seemed like a lot of the car companies had this trouble where, you know, they couldn't get enough chips for their cars. So they're also, you know, they're dependent on their workers. They're dependent on all these other companies to make chips, to make parts. So it seems like this whole supply chain of stuff, you know, materials, of workers, is always kind of up in the air. So I think that's all of those are risks. You know, there's obviously this fierce competition. There's a lot of different companies out there making cars. I think there's a couple of, you know, new agey things that people are not necessarily thinking of. You know, first, the electric car companies, for example, Tesla and Rivian, can start to gain share with their trucks. And trucks are big for General Motors. You know, you think GMC, you know, you think trucks. Even Chevrolet, you know, like the Silverado trucks, you know. So trucks is kind of their bread and butter, a lot of their trucks. And, you know, you get these new age things like Tesla going into the trucks. I think it's called the Cybertruck, just off my memory, but and then Rivian is into trucks, and so you get these electric trucks coming onto the market. And then you got a whole nother potential that, that there's companies that are in China, and then there's companies in India that could start, coming over here into the United States, and then other, Europe and other developed countries who, they could come over here. I know some people sort of poo-poo this whole thing, but I think back to, when I was a kid, Toyota came over. We had all of a sudden, we started having these Japanese companies coming with their vehicles, and at the very beginning, it was sort of a joke, and I don't think anybody thought too seriously about them. And then after that, we had a wave of South Korean cars. Companies came over, and again, people looked at those, and nobody worried about them. But yeah, I think if you're investing in any of these automakers, you can't dismiss anything, from these other countries like China and India. They make, they do make cars, and they could come here with their cars, maybe offer a cheaper price or new features or whatever combination you want to give them. But it's definitely, I would say, that could be a risk, especially more long term. The other thing about cars here I see so many people using things like Uber and Lyft. It makes me wonder whether some people could be persuaded to just not buy a car, period, and just say, well, instead of going through the expense of buying a vehicle, I'll just use Uber. And this way I'll just get where I want to go when I need to go, and why spend money on a car that's going to depreciate in value? So I think that's a risk. I don't know if it would be enough to persuade a critical mass of people to really make a dent, but it's definitely a risk. And I would say here it's more qualitative, but think that what we called old GM, but GM went bankrupt in 2009 and had to be reorganized with the government's help. The shareholders just get wiped out. That wasn't that long ago. So, who says that couldn't just happen again if we have turmoil? So, I would say, just kind of summarize trying to put all this together. Right now, in General Motors stock, you're getting this highly profitable company for cheap. But I think this is one of those situations where it's definitely cheap for a reason. There's a reason it's cheap. I don't own any GM shares. Would I buy any? Well, I would say it's tempting because the stock price is really low, and the low earnings multiples that it has. But no, I wouldn't buy into it. Like I said before, it went bankrupt not that long ago, back in 2009. It was a little too recent for comfort. I think GM, looking at it, it's doing pretty well so far, even in 2023. And as an American, we like to see our American manufacturers succeed. But as far as an investment, the dividend is too low, too unstable to really induce me to buy. I look at the big picture, if we had a bad recession. So for those of you that are more market watchers, the yields on the treasuries remain at an inverted level right now. That's just means that the interest rates on the short-term treasury bills are paying a higher rate than the long-term treasury bonds. That's not normal. So that's unusually the longer the bond, the higher the interest rates. But anyway, what does this really mean? Well, if it's an inverted yield, it's not a normal situation. Usually that's a pretty good signal that a recession is coming. And if a recession comes, all these big profits that General Motors is making, it can evaporate pretty quickly. So maybe the stock is a great deal, at this level in the 30-something dollar range per share. I'm just not willing to risk my money on it. And by the way, this is not financial advice. I'm just giving you my honest opinion on General Motors stock. So I would say that's the truth on General Motors stock. Please comment, leave your comments, thoughts, opinions, and I always like to hear what they think about it. Thank you so much. Have a good day.